So here we are. I'm still trading Ethereum. I got out of the last trade with a profit. It was quite exciting because I expected the account to just literally completely blow up. I have to pause the video because I'm having a technical difficulty. Okay, here we are. I just couldn't click on something because of where the screen recorder is and the terminal. I'm still having a little trouble. It's a little annoying. But not too long ago this account looked like it was going to go bust. It started with $5,000. I'm now went all the way down to being, when I was long, my longs were up here and the pattern was down here, and at one point when this was down here I was down $3,800, and on margin you can lose an indefinite amount. So right now I'm in a much better position. I shorted now. I was long, but before my margin was $800, but I was way out of the money. So my losses were, when the pattern was down here, I was $3,800 in the hole, and then the pattern bounced, and let's show the results. So in the account history, all those trades hit my target price. One of the trades was a loss, but overall it was a win because the way I scattered my trades, and that's how I trade. I'm an accumulation trader, but I used way too much leverage in my trade by placing too large of a lot size and not spacing out my trades enough. And it was the first time I traded Ethereum, and my initial trade was 0.5 originally, and then I followed up with another 0.5 too close together, and that just put me in a bad position. And then I followed up with another full size lot, so that I went 0.5, 0.5, and then 1.0, which added up to 2.0 lots, which was a huge amount of leverage. So now I'm going in, instead of 0.5 on my first trade, I'm going in at 0.4. This time I've shorted. This is my short right here with my target down here. I'm still trading Ethereum in the hourly time frame. And I like the short better actually than the long, because in the daily time frame, actually I might get killed in the short as well, because this could go back into an uptrend. It's hard to say what will happen. I've never traded this, so we're going to see what happens and see if I can manage these trades, so to speak. And what I think I'm going to do, just by looking at this just now, I think my next trade, if it goes against me, is going to be up at the high somewhere. So I'm just going to ride this out a bit and wait and see what happens before I place a trade in advance. This is one of my charts. It's some of my code, but actually this code is not my code right here, so I'm going to delete that. But this is my code. This is like two very sacred indicators. There's three windows. The top window is the chart window with the chart price, the actual price of the instrument being traded, and in this case it's the US dollar Mexican dollar daily pattern. And this indicator, it's one of my original works, and it's still one of my best indicators. And what happens is, when there's a tower like this, that's not even really a good one, but it shows weakness. And then you just look for these towers when they're going up. And then so a tower is a green followed by an equal sized red. I sell this indicator. It costs $700. It's not something I just give away, and people do buy it. So right there is the middle. So like when these towers happen on the top, it means you want to look for a reverse. And then I have my indicator down here is a special type of volume indicator that you can use to trade with too. So like if you see a tower and then you want to short, you might wait for other evidence, okay, and devise a trade plan based on volume and towers. So it can be kind of tricky. This pattern doesn't give like a lot of clues here, but that right there looks like it's stalling out because of the volume. And then right here is a tower, and then right there you see it going down. So this right here and this right here is a tower. That I call them twin towers, actually, not a tower, it's a twin tower. So the name of the indicator is called Twin Towers. It's on eBay. It's for sale for $700. So right there, you see how these two towers are equal in size there? And then it starts to go down after the twin towers occur. That's it. That's it. That's the trick. And then down here in the volume, this is a separate indicator I sell. You can see the volume, the selling volume comes in. So the selling volume is when the red outpaces the blue. And then when the blue outpaces the red, that's buying. This is selling. This is strong selling right there. This is buying followed with this is selling overtaking buying when the red outpaces the blue. Okay, when the blue outpaces the red, that's buying. And then the larger the bar, the more the volume. The Twin Towers is based on an algorithm, based on an average. So it's actually not based on volume, but in a sense it's based on price. It's a calculation. So the bottom one is based off actual tick volumes, and then to the right over here, while this is trading right now, it has a digital meter that tells you how many buyers there are at the current time and how many sellers. So currently there are 6,000 sellers on this live bar, and it's still trading, while there are roughly 3,000 buyers and 6,000 sellers. And then when this is lit up red, it means just like what the bar itself says, that the sellers are outpacing the buyers in this case. So if this was bullish, this color would turn green. I believe green or blue or something like that. But it's not red when it's buying. So if I change the chart, to a different time frame, maybe it will show some buying. But there's actually no buying going on, so there you go. It turns green, not blue like the bars. So in the 1 minute time frame, there's actually some buying, but I had to look at every time frame, because every time frame but the 1 minute time frame is selling. So each bar in a chart, these candlesticks, are a measure of a period of time based on a vertical plane in a candlestick bar, which takes different shape depending on how the price opens, how the price closes, and where it trades at. So it's based, what makes the body of a candle is the open and the close. So on a bullish bar, you will see a thick body between where the open is to where the close is. So if it's bearish, then that means the opening is higher than where it closed, and that will make up the body. And the wicks on it, the little thin wicks, those are little prices that are outside the open and close pattern. So those all give you clues, especially on higher time frames like the daily chart. So like if you look at this daily pattern right here, the candlestick, you see this really tall tail, and that's a sign of exhaustion. And then a thin body, a body that's not very big, is a sign of indecision. So in this case, it showed a reversal because the pattern exhausted to the upside, and then the pattern lost confidence and sellers took over. And then you can also combine that with moving averages. So if I wanted to look at moving averages, then I would load my moving average chart, and you could see that where that tall tail candle came and peaked up, it actually was fighting with this moving average, which became resistance because the pattern is in a downtrend according to the larger moving average. It's a larger moving average because the period is a 100 period. The yellow moving average on this chart is a 50 period, and the fastest moving average is a 15 period moving average. So you could see that the pattern is favoring the downside because the candlesticks are trading below the larger moving average. And then in this case, the probe went up and got rejected, and then there were several signs that made the pattern bearish. So in this case, since it's a US dollar Mexican peso pair, the US dollar, since it's USD/MXN, it means the US dollar, that the Mexican peso is priced in US dollars. So if you were to take $1, you would get 20 something pesos. I think I said that correctly, right? Because if you reversed it around, it would take more Mexican. It would take 22 pesos to make $1. So if this goes up, it would take more pesos to make $1. So since the pair is led by the USD, instead of MXN USD, it's USD MXN. It means if this chart goes up, it means the US dollar is strengthening, even though it's a chart on the Mexican peso, because the dominant, it's paired off the US dollar. So if you took your Mexican pesos and you turned them into US dollars, it would take 22 pesos. So actually, by this chart going down, it means the Mexican peso is actually strengthening. If the chart was going up, it would mean the US dollar is strengthening against the Mexican peso, because you would get more, it would take more pesos to make $1. Get it? It's kind of complicated with the way it sounds, but it's, once you get used to it, currency pairs and cryptocurrency pairs, it's simple to understand. As within a stock, all stocks on a particular market are denominated in the currency that they're traded in. So Amazon, like this is an Amazon stock, is traded in US dollars, so it's priced in US dollars. So you could say that this is Amazon priced in US dollars. So when you're pricing a currency, this currency says USD MXN. We're looking at the peso, but we're looking at it priced in US dollars, just as if we were looking at Amazon priced in US dollars, but they don't consider it a pair. You're just supposed to know it's priced in US dollars because you're an account holder with a US dollar account. Get it? So if you were in a different country, then it might be priced in euros, or if you were in Mexico, then the stock you were trading would be priced in pesos if you signed up your account that way. So that's all that means with the currency pair. And then they also represent exchange rates if you were to go a different country, but you can actually make money by trading these. But this is an exotic pair because it's the Mexican peso, so typically these have a big spread. So if I went to go a new order, you would see that there's a there's a spread here between the buy and the sell, and you look at it at the farthest. They call these pips, but it's the farthest digits in the pair. That's what makes up the spread. So if there's a big spread, it's harder to make money typically. So that's why they call this an exotic pair in the currency world. Now, if I were to trade the Euro USD, that's called the major, and the majors are more liquid pairs because there's more money exchanged between the Euro US dollar than there is the US dollar Mexican peso, even though it's a neighboring country. The Mexican economy is a lot smaller than the US economy, but the European economy is not that much smaller than the US dollar. Or the country, the Eurozone, so to speak, is not a lot smaller economy than the United States economy. So a lot of money is exchanged because a lot of more business is done between Europe and the United States than business between the United States and Mexico, even though we're neighbors. Because Mexico is still not like really an evolved country. They have a lot of crime and stuff, and there are a lot of good business people in Mexico, but it still has a long ways to come before it's considered a major. So they consider Mexico, it's an exotic currency pair. Like if the U.S., if you were comparing another exotic pair is like the Russian dollar. Believe it or not, even though Russia is a pretty big economy, they still consider that an exotic currency just because of the way business is done, and Russia's not really trusted, and as well as say South Africa. Now, when you're talking about the majors, Great Britain is a major economy, Japan is a major economy, the Eurozone is a major economy, Australia is a major economy, okay? These are all the majors. I think there's more majors than this. Canada is a major, Switzerland is a major, Australia, I think I said that, New Zealand. I think there's actually more majors, but this broker only has this many. Not every broker has every single pair that is traded. There's actually over 200 countries in the world. So not every market is traded by every broker. Yeah, I'm like big time into trading, so it's not really important to know all these things, but it helps build your confidence if you do know what's going on, to help to just, you could see through bullshit basically, okay? When people try to talk to me about stuff, and I just know immediately whether they're full of shit or not. And I don't pay attention to fundamentals. That's a bunch of bullshit too. So fundamentals, the markets are manipulated. I look at price patterns, okay, and you could see what's actually happening in the money world. And if you just know how to read charts, then you could tell what's an uptrend, what's a downtrend, what's a sideways trend. If you just look at this chart, what does it look like to you? Looks like it's kind of going sideways, doesn't it? So that's a sideways trend, all right? What does this look like to you if you look at it? Well, it kind of looks like an uptrend. It looks a little bit congested. This is an hourly time frame of the Euro US dollar. If you change the time frame, the pattern will look different. There's different patterns, different strategies you could trade. So this is a daily of the same trading instrument, the Euro US dollar, since it's denominated by the Euro dollar. It says Euro USD. This is the price. If the Euro dollar is going up, the chart will go up. If it's going down, it will mean the US dollar is strengthening because the first the prefix of the pair starts with EUR, which stands for the euro, and then the second part of the pair is USD. So if this goes down, it means the US dollar would be strengthening against the euro, okay? But if this is going up, it means the euro is strengthening against the US dollar. But what does that look like to you? It looks like it's going up to me. So if someone says, oh, the euro economy is weak, but I'm looking at the euro dollar and it looks to be pretty strong, that looks like an uptrend to me. The Mexican dollar is actually doing pretty good against the US dollar. But this is my trade, Ethereum here, looking at the daily time frame, and right there I sold, and I'm going to be following this trade now. I've done 1, 2, 3, 4 trades in it so far, and they've all pretty much worked out. There was a loss, there was a tie, and there were 2 wins. Okay, overall I've won. So I started with $5,000 and now I'm up $5,341. So basically I've made about $100 a day. Using pure technical analysis and trading skill. So my skill is going to be better now that I have a little more experience trading Ethereum, because now I know what I could do with the leverage. I didn't blow up this count like I thought I was going to do. Some trading action going on. My indicator tells me when there's a change in the volume. It says tick up, and now it says tick down, so it's going back and forth between tick up and tick down. I'm going to shut it up though because it's annoying me. Stay tuned for more trading updates. Just running over my trades, and that's it. It's an ongoing war. Trading is war. It's a battle between support and resistance. Supply lines. We're looking at supply lines. We're looking at exhaustions, where you run out of supply, where you get supply. There's buyers, there's sellers, there's battles that take place, and that's part of reading a chart. It's literally war, and like you're looking at different trading instruments. It's like looking at different battles. Okay, that's what it is. It's this complete war. It's chaos. Things could change just like instantly. Don't pay attention to the news. There's no confidence in these markets, even though they act like they're confident. It's fear and greed. Okay. These things change. You could see the fear and greed on the charts. Okay. Trader Neil, I'm also known as Neil Russell. So this is Neil Russell here, trading cryptocurrencies. I'm also trading stock options. And by next month, this is a demo account, I'll have a more solid strategy to be trading cryptocurrencies. And I already have like a lot of skills under my belt. This is the first time I traded cryptocurrency, so it should get pretty interesting from here on out.